Good day, one. Good day, all. I hope you guys are managing your risk in this very volatile environment. Today, I want to talk about this is the most important market that every single trader needs to be watching, tracking, and paying attention to every single day. Donald Trump, Scott Bessent, Howard Lutnick, these guys, I genuinely believe that they do not care a lot about the stock market. The stock market could fall and it wouldn't really change their mind a lot. But they cannot, I repeat, Trump, Bessent, no one from the Trump administration, the Fed, you cannot ignore the bond market, because the bond market has real economic effects. So if you don't know what government 10-year yields are, basically this is kind of like a barometer for what interest rates are in the US. So the higher this gets, in simple terms, it means that Americans would have to pay higher interest rates on mortgages, on car loans, and so forth. So the 10-year yields, it has real economic effects. If this rises, this means trouble for Americans. So they cannot ignore the bond market. And I know a lot of traders, they don't pay attention to yields. They just look at charts and draw some lines, and they don't care about this stuff. But this right here is the most important chart. So on Monday, yields went up 30 basis points, which is very unusual. You don't see that often. And that's when everyone started to talk about yields. But I have been mentioning yields since April 3rd, and that was last week, Wednesday or Thursday. So here I noted that during all of the fear and everyone thinking that there's a recession and tariffs and all of that, yields actually fell. If we look at the chart on Thursday, yields actually closed about 5 basis points lower. And this is not normal. In the type of environment that we were in, it just did not make sense at all for yields to close 5 basis points lower. So I looked at this and immediately I was suspicious. And this was from last week, Thursday, and this actually saved me from entering a few positions on the yen, on the dollar, and so forth. This chart right here literally saved me money by looking at it and understanding it. And then obviously when Monday came and we saw yields up basically 40 basis points from Monday to Tuesday, this started to cause some concerns, and everyone started to worry and say, hey, what's happening here? And on April 8th, I think this was Wednesday, let me see. On April 8th, that was Tuesday, the title of my daily market outlook was "Why is everyone selling bonds?" That was literally the title of my outlook on Tuesday. And I mentioned that everyone is now talking about 10-year yields, but no one knows the reason for the price action. I have been highlighting for a week now that 10-year has not been trading as expected in this type of environment. We continue to see bonds being sold at a rapid pace. So when I say, if you don't really understand yields, bonds and yields have a inverse relationship. So if people are selling bonds, that means bond prices are falling, and because yields have an inverse relationship with bonds, that means yields are rising. And remember, when yields are rising, this has real negative economic effects. So investors were clearly selling bonds, and this caused yields to rise. And that's why I was asking, why is everyone selling US bonds? And I went on to mention that 10-year yields closed 10 basis points higher today, and no one knows why. That's a 40 plus basis point move in 2 days. During a time when people are fearing a recession, why is no one buying US bonds? I have no idea, and there's still only speculation about what's happening. And this was what I noted on Tuesday. This was this day. And on Wednesday, this is when the Trump announcement happened. And the Trump announcement, this happened because of the 10-year yields. Trump announced a 90-day pause on tariffs, not because he respects other country, he likes what they're doing, or he likes the president. He literally had no option. He had to announce a 90-day pause, because this right here has real negative economic effects. And this blue line right here that I have marked up on my chart, this line right here, this is the 4.5% level. And I call this level the rate sensitive level. That's actually an idea that I got from JP Morgan while reading a briefing a few months back, like in January or February. But 4.5% level, this level right here is very important. Once rates head above this level, serious concerns start pouring in the market. So you can see that on Wednesday, and this is when Trump announced 90-day tariffs, we actually went to this 4.5% level, right? So I'm pretty sure there's just no doubt in my mind they have to. The Fed watches this and the Trump administration watches this. So the moment this headed to the 4.5% level, this is 10-year yields, I'm pretty sure the Trump administration said, hey, we need to do something. If we don't do anything, yields will go higher. Yields would have probably rebounded here and then bounced higher. And yields being at these levels, as mentioned, this is just not good. And this can cause serious damage in the economy. And also even for debt refinancing and so forth. This can cause serious issues in the economy. So this market right here, now I have to be honest, I was watching this market, I was noting this market, but I was not quick enough, or I'd say smart enough to say, okay, the yields are getting out of control, so therefore Trump, he has to do something about tariffs, so he's going to make an announcement like a pause in tariff, and this would cause a relief. And I could have went ahead and I could have bought the Nasdaq, I could have bought basically all risk assets, because that's exactly what happened on the announcement. If you look at Nasdaq, you can see that we had basically a 11% day on on the Nasdaq, 12% day. So risk assets performed well on this announcement. As mentioned, I was not smart enough to put all of that together and come to a conclusion that, hey, he might do something. But this is something that I'll definitely be keeping in my mind as time goes by. Whenever Trump makes any of his decisions that obviously has economic consequences, pay attention to yields. If yields are rising and heads to this 4.5% level, as I mentioned, Trump is more than likely going to have to reverse his decisions, right? So if he makes any decision, any announcement that everyone is saying is crazy, and yields, the bond market starts to react, the bond market tells him that, hey, this decision is stupid, he has to reverse it. So pay attention to 10-year yields. You also have 30-year yields, but this they usually move in sync, and you can see that 30-year yields, we actually headed to the 5% level, but this has less of an economic impact. So the 10-year yields is the important market to pay attention to. If you see this market rising, it's trouble, its problem is not good. And as mentioned, this 4.5 level, nothing good happens above the 4.5% level in yields. So I know a lot of traders, they don't pay attention to the bond markets, but I do. And if you go to my watch list here, so this is my watch list that I look at every day. I have basically the 10-year yields in what I call risk gauge. So I basically gauge the risk of the markets using 10-year yields and VIX. So if yields are falling, and this is US 10-year bonds, and as mentioned, they are inversely correlated. So if bonds are going up, yields are going down. So if 10-year yields are falling, especially rapidly, that would signal that risk is off, right? That would signal that, hey, investors are buying bonds as safe haven. But if the opposite happens, then you can say that, okay, risk is on, so that's how I basically gauge risk daily. And as you know, different assets trade in a certain predictable way in different environments. So in a risk-on environments, risk assets like the Nasdaq, the Nikkei, the Australian dollar, they tend to trade positively in a risk-on environment. So if my risk gauge here is showing that the VIX is down, today the VIX is up. So obviously today is a risk-off day. You can clearly tell oil is down 5%, the Nasdaq is down 3%. The yen is up almost 2%. So today is clearly a risk off day, right? And my risk gauge is telling me that obviously we have the VIX higher, but even though today is a risk off day, again, 10-year yields, you would expect a lot more buying of bonds. Yields are basically flat on the day. So we're in a risk off environment and yields are flat on the day. This is still telling me that everything is not over, and yields being down, we may actually see a continuation. So Trump may even have to pause tariffs even more or take them off or something. But the bond market is still not satisfied. But as mentioned, you can do more research on this for yourself. You know, it will take, you know, a few days or weeks if you don't really understand the bond market to really understand how it operates. But once you get a bit comfortable with it, you will see the importance. But at the moment, the bond markets, they're not satisfied. The bond market is clearly telling us that, okay, Trump, we saw you did the 90-day pause, and that's okay. This is why we saw the correction. But today you're seeing that buyers are here, right? We're seeing yields climbing again. So this is still signaling to me that, hey, it's not over, it's not finished, more chaos lies ahead. So this is a message that the bond market is signaling to me at the moment. So yeah, that's about it. That's really all I wanted to say today. I hope you guys, as mentioned, trade safer in a very volatile environment. Manage your risk less. If you used to risk 1%, 1.5% per trade, start risking 0.5% per trade, even 0.4% per trade. At this moment, whatever technical or fundamental strategy you have, more than likely it will be less effective, because technicals and fundamentals are not the main driver of price when volatility is high. The main driver of price are headlines and news flows, and most of those are unanticipated. But if you have, you know, a good understanding of the market, you know, it can really give you a slight edge, but still reduce your risk. But with that being said, peace and trade safe.